Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today, shall we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the major breakout that occurred on Bitcoin over just the last few days. As we've been discussing for the last month, Bitcoin has been under a very large downtrending level of resistance. And if Bitcoin was able to break it, a major rally was going to occur. We even discussed in the last stream about how Bitcoin almost looked like it was in a 3-5-A trade setup, a 1, 2, 3, 4, 5 corrective movement on the Elliott waves with an ABC bounce. That's not exactly the best setup because it didn't actually meet all of our criteria for Elliott wave, but nevertheless, it does kind of look like it. So we need to decide whether or not Bitcoin is going to go through this major rally with price targets up towards 100, 102, 104. As we know, if Bitcoin can get back up above about 109, that's where we would say that the bull market is potentially starting to resume because you would likely see a massive short liquidation event take place at those levels. But the interesting thing is that Bitcoin has actually gone through somewhat of a correction over the last 24 hours, which isn't exactly looking great for the bulls. So we're going to be doing a lot of short-term technical analysis to kick off this stream. And then from there, we are going to go ahead and start talking about some of the other major factors that are going to impact Bitcoin this month. We have the MSCI decision coming up on the 15th. We have Donald Trump and team's invasion, not invasion, I suppose. What's the better word for it? Batman black bagging of Maduro. Just kind of jumping in there when, you know, like 5 dudes sitting at the foot of his bed, like, what's up, fam? Come on, you're coming with us. Yeah, really? Yeah, no, right now, jump in the helicopter. Come on, we got to go. You got a court date in the morning in New York City. Let's go. So we're going to talk about all of that today. But first and foremost, as always, we're going to start with the charts. Really appreciate you all being here. Marathon Danny is in chat. Bartizan's in chat. Whoop-de-doo is in chat. That is an awesome name. You know, I have always been tangent already. We're getting into the tangents already. I've always been so fascinated by screen names. I remember when I was starting to do YouTube videos in 2011. Mind you, this is like a bajillion years ago. In 2011, I was starting to do YouTube videos, and I was trying to figure out what to call my channel. And I saw this guy, and his name was Monkey Farm. His name was Monkey Farm. Like, where do people come up with these names? It took me almost 10 years to figure out the name Crypto Jeb. It's just real simple, but it works. And now we got it on a coffee mug. More merch coming this year, guys. This is going to be a big year. Just you wait. We got a lot to cover. Heavy Machine Gun, HMG is in chat. Boston Alpha is in chat. Philly Skills 1428 in chat. General Dictator. There you go, with the funny names. That should be a segment on our stream. Give me a 1 in chat if that should be a segment on our stream. Then we'll jump into the TA. I promise. I won't make you wait any longer. Should that be a segment, like funny names? Because we get some really funny names in this chat. Whoop-de-doo said, ha ha ha, thanks, Jeb. It's a good name. All right, let's do it. Bitcoin is currently correcting off of a recent local high that we set at $94,000, and this local high is extremely important. The reason that it's extremely important is because it's actually the exact same local high that we set back here on the 9th of December. We ended up rallying all the way up to $94,500 and then correcting. Right? And so what Bitcoin has essentially been doing is it's been building this large it's in a downtrend, but it's actually an ascending triangle pattern. So it's actually an ascending triangle bear flag. You don't see those too often, but the reason that they're a little bit confusing is they actually contradict each other. Generally speaking, when you have a flat level of resistance, and an uptrending level of support, generally that means that formation is going to break bullish. On the other hand, when any kind of flag pattern, such as this one, is following a downtrend, then that generally says that we're going to be breaking to the downside. And as you guys know, I try to stick away. I try to stay away from short-term predictions. I try more so to prepare you for both directions. I can make predictions, and we typically are pretty accurate on them. But the hard thing with short-term technical analysis is that there is so much random noise in the market where you have the butterfly effect and you have one little domino kick off a bigger domino that it kicks off a bigger domino that kicks off a bigger domino that etc. And you end up moving in a certain direction because of this tiny little flap of a butterfly's wings down here. And this is the kind of pattern that we discussed last week when we were on stream, is that Bitcoin was just shoved in between this downtrend and this uptrend. And more likely than not, Bitcoin was going to break out. But honestly, we just don't know because Bitcoin had such a low amount of volatility. What I have been telling you is that volatility was coming and it was coming soon. I even believe I told you in the last stream that volatility was basically certainly coming next week. Well, now it's next week, right? And here's the volatility. We discussed right here, the Bollinger Bands have not been this narrow in a very, very long time. It was very obvious to us that a large amount of volatility was going to occur. The last time that we saw Bollinger Bands this tight was on the 30th of July, and following that, our actual breakout, Bitcoin would drop by $6,000, 5%, and then rally by $12,000, or about 11%. And so we knew that a lot of volatility was coming. We just didn't have absolute certainty of which direction it was going to go in. And it makes sense that we rally, but here's the problem that I'm running into. Here's the issue that I'm running into with this breakout. If you were going to say that this is a 3-5A trade setup with Elliott wave, 1, 2, 3, 4, 5. Now, before you crucify me in the comments, I know that this is breaking rule number 2 and rule number 3. We're going to get to that in a minute and why I'm even entertaining this idea. If you're going to say that this is a 3-5A with the A, B, C, then there are some very serious issues with this that make me concerned that this is going to fall over. The first of which is that if we go through our rules, rule 1, rule 2, rule 3. Rule 1 is 2 must not go above the beginning of 1. That is a check. And if we give our rating system, then we can see that it's just a check because it's between 0.5 and 0.68, right? It's just a check. If we go for rule number 2, that the wave 4 must not enter the territory of wave 1, well, you can see if we connect the highs, then the trend line is pointing up. It's not flat. It's not pointing down. It's pointing up. So 2 is categorically speaking, it's an X. We actually are breaking the rules of Elliott wave here. And then rule number 3 is that the wave 3 cannot be the shortest. By both measures, you have negative $18,000 and negative 15% here, right? And then we also have negative 23,000, negative 18%. And then we also have negative 27,000, negative 25%. So as you can see, this is actually the smallest wave, which means this is not Elliott wave. Plain and simple. It's I. It's invalid. It's not an S tier setup. It's not an A tier setup. It's not a B tier setup. Sab. It's an I tier setup. It's invalid. This is not Elliott wave. Why am I even talking about an invalid pattern? What the heck, Jeb? Who cares? If it's invalid, it's invalid. The reason that I'm talking about it is because the entire thesis with which we would say that Bitcoin's going to go into a major rally over here would be predicated on this being valid Elliott wave, which it's not. If we were going to see this leg launch us, we would see this leg launch us because of this Elliott wave setup. And that's not what we see. This is fundamentally invalid. It's not up for debate. It's just plain and simply invalid. Is it a 1, 2, 3, 4, 5 wave pattern? Yes. Does it follow the rules? No, it does not. And since it does not follow the rules, I don't have a lot of confidence that you're going to see the C wave move to 1.618 fib extension of the A wave. Right? If we are looking at a ABC bounce, then generally speaking, what you would be looking for is for Bitcoin to move up to the 1.618 Fibonacci extension off of the A wave. So we have the A wave here with the fib-based extension, and then you have the A wave, the 1.618 for the top of the C wave sitting up at 102, 104. And what we're looking at right now is that we just simply don't have the setup that we're looking for. Glid 690 is making a point that I actually wanted to make that's really beautiful, and that is that perhaps the reason that this is not looking like Elliott wave is because the 5 wave is not actually the 5 wave. It's actually the 3 wave, and we're going to go a little bit lower. That is a possibility, right? So let's talk about that here in just a minute. But this does not give me a great deal of confidence that Bitcoin is going to be able to break through 95. Can it? Yes, absolutely. Am I excited about it? No, I'm not. Now, let's talk about some ways that this actually could be bullish for Bitcoin. Let's talk about some ways that this setup could actually send us higher. What we could see happen here is we could see that Bitcoin ends up building this cup formation. Maybe we come back down here and we back test off of the 50. And we get our nice, beautiful little back test, and then we bounce. That is very possible. But once again, I have this concern that we're trading sideways. If you're trying to get into a big trade here, we are ranging. And since we're ranging, it's difficult to actually eke out profitable trades in this market. What is much more easy to do is to simply be accumulating. And this is what I always encourage you guys to do, is to follow the rules of FinSaw, follow the laws of money, follow the steps of the financial sovereignty way. Make sure that you have 3 to 6 months of cash in savings so that you don't have to dip into your Bitcoin during the bear market, so that you don't have to sell at a loss. And then dollar cost average, just dump money in. These are excellent levels to be DCAing. This is a gift. Is Bitcoin going to go back up to 100? At some point, it probably will. We don't have a good direction yet. It would be foolhardy for us to say that there's an extremely obvious direction here, because there's not. We can look at this and say there's a very obvious trend. Very obvious trend. We're moving in a certain direction. Right now, what we can say is that Bitcoin is very confidently moving sideways. And that's not fun. That's not sexy. Because you know what a lot of people want? They want to hear, Jeb, I want you to tell me the Bitcoin's about to moonshot. And if you don't tell me that Bitcoin's about to moonshot, I promise you I will dislike. Dislike. Well, guess what? YouTube hid the dislikes a long time ago, so nobody will know. No, I'm just kidding. I mean, that is true. But what I'm going to tell you are the facts. I'm going to tell you what the market is telling us. And here's what I can say that is encouraging. I can say, and this is discouraging, that this 3-5A setup sucks. Like it sucks. It's invalid. Whereas in past, we've had a valid 1, 2, 3, 4, 5, right? Could kind of draw out something like this. This is valid Elliott wave. We bounced out of it. We didn't get an actual 3-5A ABC correction out of it. We just rallied, right? And we've seen kind of similar things over here. This is not really very easy to explain as Elliott wave, but nevertheless, we ended up seeing the rally. So even considering this Elliott wave theory is invalid, because I would love to tell you that this is valid and this is pointing at 100,000. Be the easiest trade of the set. It'd be the easiest trade. Be so easy. I can't tell you that. What I can tell you, and this is the exciting part, what I can tell you is that Bitcoin is following another pattern. And that is the pattern where we set a downtrend. So far in this cycle, we set a downtrend that defines our corrections. You can see we're in a primary bull market. These downtrends define the corrections against the primary trend. You'll notice a few things. Number one, they've generally, over the last year and a half, gotten steeper to the downside, which points more so towards a bear market, right? Which makes sense because we have longer-term bear market confirmations. But the way that we've broken out of that is we have seen Bitcoin manage to rally above the 50 moving average, as you can see right here, break that downtrend, and we end up going through this breakout formation. And that is what Bitcoin's doing right now. So while the 3-5A is invalid, we are seeing very strong signs that we could be seeing a rally for other reasons. And that is the fact that we have this underside, overside test on the 50. See the 50 moving average coming up right here? We tested on the underside, broke through it, tested it as support while breaking through the downtrend. We saw the exact same thing happen over here. Bitcoin broke through the 50 moving average, underside, overside test. Do the underside test and the overside test. And from there, we move into the rally. And then we also broke this downtrend. We did the same thing. Underside, overside test. Classic breakout characteristics that we can look for, that are repeatable, that are scientific, that we can apply to today. We did the same thing over here. Underside, overside test. Here's the underside test of the 50. Here's the overside test of the 50. And then also the downtrend. Here's the underside test of the downtrend, overside test of the downtrend. Right there, right there. And so when we saw essentially our downtrend and our 50 flip into support, in the last 3 instances that we found ourselves in this corrective movement, Bitcoin would go into these large parabolic rallies. And this would happen following Bitcoin trading sideways for 170 days in that case, 210 days in that case. We moved to the downside for 80 days in that case. In this case, it was much faster. We moved to the downside for 44 days. It's only about 80 days into it. So possibly Bitcoin dropped faster because of the 10-10 crash, got the correction out of the way earlier, and off we go. So we just discovered that there's a pattern. And what is technical analysis if not pattern recognition, right? What we saw is that Bitcoin needed to do an overside-underside test. Well, here's your underside test. Here's your overside test of the downtrend. As far as the 50 moving average is concerned, you could either call this the underside test or you could call this the underside test. Then you break through, and then we look at the overside test. So this gives us more information. Jeb, why are you walking us through multiple theories of trying to understand the market? Here's why. Because this is how it actually works in the mind of an analyst. In the mind of an analyst, what you're looking at are multiple different angles on the market to try and understand what it's doing. There's an old, like, African proverb, I think it is, like, if you're blindfolded and you're presented with an elephant, how can you tell that it's an elephant? If you're standing in front of the elephant and you touch the tusks, you're going to think it's a spear. If you're on the side and you touch the leg, you're going to think it's a tree. And if you're on the back and you touch the tail, you're going to think it's a broom. How do you know what it is if you're blindfolded? You walk around the elephant and touch it everywhere, right? And you get a feel for what it is, and you're like, oh, wait a minute. It's got 4 big legs. It's got a big old tail. Things like really tall. I can't even feel the underside of it, but this must be something up there. It's got these tusks. It's got this trunk. I think it's an elephant. And even though you're blindfolded, you can figure out what it is because you're looking at it, you're feeling it from different angles. And that's exactly what we have to do with the market. We are blindfolded at all times. There is a fog of war on the future. We don't know what Bitcoin is going to do. Everything out here, all of it, we're blind. We have no clue what's going to happen. We don't have any idea because it hasn't happened yet. Time flows in one direction. Sounds exciting for the elephant. Time flows in one direction. Everybody's getting like flashbacks to the 2010s with bad boy bands. Yeah. Time flows in one direction. And we don't live in that in the future. And by the way, and some of you need to hear this, you don't live in the past either. You live in the now. And so what we have to go by is the now. And the way that we apply the analogy of the elephant is that we look at the current market to try and figure out what it's going to become from as many different angles as possible, because one angle is going to give us some context, one angle is going to give us some context, one angle is going to give us other contexts, etc. And so that's why we're looking at it from multiple different angles, from multiple different theories, and we're going to keep doing that. We've got several other ways I want to look at it. The first way we looked at is the Elliott wave theory. It's invalid, but it kind of looks like it, and to the untrained eye, you think ABC is coming. That's what you would think. And there's a lot of Elliott wave practitioners that have no freaking idea what the basic rules of Elliott wave are. And they're going to look at that and say, it's Elliott wave. We're going to bounce. And so, I mean, it does. It looks like a market that is having a recovery. It just does. So that is something that is possibly moving us to the upside, but this is invalid, so it's a mixed bag. Give it a tilde. We don't really know. It's an inya. It's not confident, right? Now, if we look at it from the context of the downtrend so far, that gives us a lot more clarity now. Now that's a very strong point in favor. So our first theory is kind of a Our second theory is a check. Yes. Bitcoin's done its underside test and broke through on the 50. It's done its overside test on the downtrend, broke through. That's a check. Heck yeah. Our second theory, we'll call this E, is a Our let's call it a downtrend, DT. This is our second theory. It's a check. Absolutely. That's accurate. Okay, cool. So let's talk about some other ideas about how to look at the market. I like this. It's nice to be able to kind of quantify what the market is doing. Let's go to farside.co.uk and let's look at the inflow of investment. That's predatory animal harassment. I know. We're going to get in trouble for that one. We got I almost said FEMA. We got PETA en route. Hey, listen, if PETA shows up, just tell them that steak I was eating last night, he was eating their grass, so I did him a favor. All right, Bitcoin has seen a large amount of inflows over the last 5 days or so. In fact, on the 2nd and on the 5th, we saw a cumulative $1.3 billion worth of inflows. And you can see that the correction, the downtrend on flows has actually kind of reversed. You're seeing a little tiny tick, a little bit. It's just a little bit. It's just a little bit, right? Just a little bit. Where'd my thing go? There it is. Just a little bit. Just a little bit of a move up. You can even see it right here in the cumulative flows. You see? Poor grayscale. In the cumulative flows, you have a little bit of an uptick. And so that's a good sign. We had an outflow yesterday, but the outflow is smaller than the inflow the day before. And the inflow of this day was larger than that outflow, and this inflow is larger than that outflow, etc. And I want you to notice something. I want you to notice something, and this is our third perspective on the market. You know, have you ever been to the optometrist? God knows I have. I can't see squat. I have a bad case of CSS. Can't see squat. In fact, while I was traveling, we were in the pool. I got the most brutal headache in my entire life because I had my glasses. My glasses were not on while we were in the pool. And because my glasses weren't on, my brain's like, what in the world is going on with our eyes? Brutal migraine. Anyway, part of my day. When you're at the optometrist, you have these different lenses that are put in front of you until you can see clearly. You understand what I mean? And so we're doing the same thing with analysis. We're like, okay, we're going to look at this from this Elliott wave theory. It doesn't give us much. The fact that it doesn't give us much gives us something, though, right? You know what I mean? The answer, I don't know, sometimes can be a helpful answer. It really can. Okay, and then we're looking at this from this context of how the markets have moved in past. Okay, great. That's a check. That is hands down, very clearly, very bullish. Now, learn more about the V-Wave stock. No, I think I'm good. Now we look at the flows from the ETFs, and I want to put another layer on top of this, and that is the date. I want you to notice something. Notice that something seemed to have changed in January. What changed? This is very obvious right here. What changed? What changed? What changed is people are no longer selling Bitcoin to harvest losses. This entire correction is a spectacular way to tax loss harvest. Because the way that Bitcoin is classified by the IRS, it is not subject to wash trading rules, which means at least for now, you can sell it, capture the capital loss, because it's treated like a commodity, like a property, right? You can capture the loss, buy it back the next day at about the same price, and you can save so much money in taxes. And this led to a lot of selling. And I'm going to bet that a great deal of institutions were doing this. I would not be surprised if the minds behind like BTCI over at Neos were doing this. I would not be surprised if some of the like the BlackRocks of the world were doing this. I don't actually know if they can do that, but it wouldn't surprise me if they were. But I'll tell you something. I know for a fact a lot of whales and a lot of institutional players, they were doing this, which is triggering a lot of sell side pressure. Everybody going into stables as we move through the new year. And then as the new year starts, boom. It resets your average cost basis. But a lot of people would love to have an average cost basis of $90,000. You see what I'm saying? You've got all these entries, all of these entries up here. If you entered anywhere in here, you can sell that entry for a tax loss harvest, which is something that happened. And so when you overlay the year, you notice at the beginning of the new year, all of a sudden, there's a lot of new investment. And that kind of explains why this little bounce is happening. So from this theory of, let's just call it inflows, calls our third kind of lens on the market, it's definitely a check. It's very bullish. A lot of people are starting to dump money back into the market because of the new year now. and they don't have to worry about taxes for another 12 to 16 months. And so this is very good for the market. Very good for the market. So all of these things give us some context as to what the market is doing, right? They give us some context as to what the market is doing and where Bitcoin is going to go next. So I want to hear your opinions on all of this. There's a lot of other things that we're going to talk about, but I want you to listen to this. Now, here's another thought, and someone mentioned this earlier. Let me see if I can find a good article that we can kind of talk about from here. All these news articles, they want me to pay for them. I'm not paying for your news article. I'm good. Let's see if we can have somebody that's not going to give me a paywall. Here we go. Investors Business Daily. So, strategy is growing because of MSCI's decision. Equity index manager MSCI will let strategy and other digital asset treasury firms stay in its global indices for now, but it announced a new rule that could make it harder for them to buy Bitcoin and other cryptocurrencies. MSCI said it won't count new shares issued by strategy and other digital asset treasury firms. My goodness, I'm good, thanks. Said it won't count new shares issued by strategy and other digital asset treasury firms, keeping their index weightings from growing as they issue more shares to buy Bitcoin. MSDR stock jumped over 6% in after-hours action following the MSCI news, but has given up nearly half of the gain. Bitcoin initially rose on the MSCI news, but has undercut its pre-announcement level. While headlines indicate a positive outcome for strategy, MSCI signaled that exclusion of strategy and similar firms is still firmly on the table. However, the index operator said that it needs more time to determine the right criteria for keeping out companies that aren't operating companies but are primarily investment-oriented. MSCI's indices, equity indices, including MSCI World and MSCI USA, are widely used benchmarks for global stock performance. ETF investments totaling $2 trillion are linked to MSCI indices. So if you don't know who MSCI is, they are an enormous equity index manager that primarily gives guidance for many of the very large stock indexes that we use in traditional finance. So let's look at strategy, because this is another lens through which we need to view the market. Strategy is in a very interesting setup right now. And that setup is one where we have a downtrending level of support, and we have an uptrending level of support on the RSI. We also still do have this abandoned baby doji candle over here that is like 1 in 7,000 candles. This is an ultra rare. Like, this is, somebody needs to NFT this and sell it for 13 cents because NFTs are freaking dead. This needs to just be saved. This needs to be put in this is beautiful. The only issue is it didn't do anything, right? It's traditionally a very, very, very bullish pattern. It's almost always a very bullish pattern, and it didn't lead to a rally. Now, it's possible that a rally is going to come now, but not yet. Now, we also have, so we have this downtrend and this uptrend. This is bullish RSI divergence, right? It's bullish RSI divergence. Does this mean that Bitcoin, that strategy will end up going into a rally? Possibly. Absolutely, it possibly could. It might mean that strategy is close to its bottom. It is operating near NAV, right? It is very possible that this is a new floor for strategy, that we set a level of resistance up here like 170. We're coming back down here into the 160s, 170s. We're going to bounce from here, and then strategy will rally higher. Very possible, especially on the MSCI news. Now, this is, at the moment, extremely unconfirmed. We have downtrending level of resistance. We need to see this play out. But if you see strategy going through this correction and it break bullish, then that is where we could end up seeing some sparks fly. If strategy starts bouncing and rallying, that's probably going to drag Bitcoin with it, and then you're going to end up seeing this flywheel effect happen in the opposite direction, which is that if strategy is rallying, then that is going to cause Bitcoin to rally, and if Bitcoin's rallying, that causes strategy to rally because their NAV goes, the NAV goes up, right? The native asset value goes up, and so you can see this almost engine effect, kind of like how we've talked about in the past with the altcoin engine, where Bitcoin and the altcoins pass the energy back and forth and back and forth. You could see kind of the same thing happening with Bitcoin and strategy, where when Bitcoin rallies, it causes strategy to rally. When strategy rallies, it causes Bitcoin to rally. You have to understand strategy has just passed 3% total holdings of Bitcoin. They are impossible to ignore. They are one of the largest holders of Bitcoin in the entire world, and it is seriously possible that Strategy will end up becoming a larger holder of Bitcoin than Satoshi Nakamoto. And this is actually a very serious concession towards Strategy. Just the fact that they didn't get excluded is a big deal. It's a really big deal, because everybody in this conversation, whether you like Strategy or not, needs to be completely honest. Their software business is tiny compared to the holdings. The holdings came from them from selling stock to buy Bitcoin, and then the stock going higher on the hype. Their actual business is tiny compared to the amount of Bitcoin that they have. They do look like a investment-oriented company. Should they be excluded? I don't think so, though, because they're building products on top of it in the same way that banks do. They're building fixed income on top of it through, all the Strike and Strid and all of these different, prefs. And so, do I think they should be excluded? No. But the point here is that this is a very big step in the right direction for Strategy. It happened just a little while ago. And so, is this a good thing for Bitcoin? Generally speaking, I would say yes. It means that Bitcoin now has, and we'll just say Strategy. Let's have this be our fourth lens. Strategy is one of the largest representatives of Bitcoin in the traditional finance ecosystem. The only thing really bigger than Strategy in the TradFi ecosystem is probably the ETFs. And so this is giving us a huge amount of credibility and validity that even MSCI is giving ground to Strategy. Now, the battle's not over. As MSCI said, the option of them being fully pulled is still firmly on the table. But this is a very good sign. It is a very good sign. So I'm going to give this a check minus. I'm going to give it a check minus. The reason I'm going to give it a check minus is because MSCI did still leave it on the table that this could, that they could be excluded in the future. And also, and this is very important to keep in mind, that that they won't count new shares issued by Strategy and other digital asset treasury firms. This is a problem, because that's like Strategy's entire business model is issuing shares to buy Bitcoin. So I mean, this could end up becoming this one sentence right here is going to end up being a big deal this year. You need to pay attention to this. This needs to be on your radar. MSCI said it won't count new shares issued by Strategy and other digital asset treasury firms, keeping their index weightings from growing as they issue more shares to buy Bitcoin. That is going to be very interesting. Now, all that Strategy has to do here is issue prefs, those not grow in the indexes, and then dump that money into Strategy, increasing the amount of Bitcoin increasing the Bitcoin per share of the stock that's already issued. And then essentially what this does is it forces Strategy's stock, if they want to be in compliance with MSCI, to be scarce the same way the Bitcoin is. So this is, I mean, you could go a lot of different ways on this. This is something that we'll keep thinking about. But if they are not going to count new shares issued by Strategy and other digital asset treasury firms, that dissuades Strategy from that dissuades Strategy from issuing new shares on Strategy, which actually could end up becoming the right force that investors want, because people are concerned about the devaluation of the Strategy stock. So, all in all, this is potentially not great for Strategy's strategy. I'm sorry, but it actually might be very good for the principle behind what behind what Strategy is trying to do, which is create a digital credit ecosystem based around scarcity. And so if this leads to Strategy not issuing more Strategy stock, I believe the shareholders would be ecstatic about that, because they're tired of seeing the devaluation of Strategy itself. They don't care if you issue as much as you want in a pref, right? They don't care about Strike or Strid or any of them. They don't mind that, because you're not devaluing MSTR. But if Strategy responds to this by saying, we are not going to issue more Strategy stock and it's going to remain scarce, that'd be the play. That'd be the play. Strategy has enough Bitcoin. use the prefs to raise more Bitcoin if you want. That's fine. Just keep the stock scarce. So my call for Saylor, who I've met Saylor. We have an interview with him on the channel. Dude's awesome. I'm planning on getting him back on this year. I'd love to talk with him about this. Let's move in a direction. And he's already, for the most part, moved in this direction. This is why the prefs exist. That's the whole reason that they exist in the first place. But let's move in the direction of strategy itself, the stock not being diluted anymore. Let's move in that direction. Let's raise capital in other methods. And what you'll do is if you go for a year or 2 years or 3 years and you don't devalue this stock's going to end up looking like Berkshire Hathaway. If you don't do any stock splits, which who cares if you do a stock split, that's fine. That doesn't change the actual underlying supply and demand characteristics. But let's say that you just didn't split it and you actually put a hard cap on this stock. You diluted the crap out of everything else as much as you want because you're trying to abide by what MSCI said. We won't count new shares, but we'll count existing shares. This one sentence right here could turn strategy stock into a scarce asset like the Bitcoin they're holding. And if Saylor plays it that way and creates this narrative where not only is the Bitcoin underlying strategy extremely scarce, so too is stock of strategy. Ooh, that's where it gets very interesting very quickly. So that would be my recommendation is do exactly what MSCI said. Understand that they're not going to count new shares issued. Keep the shares completely limited. I don't know how many outstanding shares are on strategy. Let's look it up. It's probably a couple 100 million. I have no idea. How many shares are outstanding? Let's see. Okay. Right here on their website, they're saying 312,000. So that was, yes. So there is a little bit of dilution going on, but not much. Not much. So let's say there's 312,000 shares. Leave them alone. Leave them alone. Just leave it here. Just leave it here. And you can see the shares per Bitcoin has dramatically grown. Right now, there's 2 Bitcoin for every share, 2.1 Bitcoin for every share. Back here, there was less than 1 Bitcoin for every share. So continue to do exactly this. Continue to accumulate Bitcoin through the prefs. Get this up to 3, maybe up to 4. Maybe get 1.2 million Bitcoin and keep the shares at 312,000. If you do that, then you're going to create something in TradFi that's going to completely blow up the system. So I generally think that MSCI's decision is bullish for Bitcoin. I'm going to say it's a minus because originally I think that the sentiment around this sentence right here is going to freak people out, which is probably why Bitcoin's dumping on the news, because the news came out over the last 48 hours and Bitcoin's actually dumping. But I actually think it's a good thing because I think what you're going to see happen is that strategy is going to move in the direction most likely of keeping this number fixed. That's what I would like to see, right? They added like 700 shares. They had like 200 shares a day. Let's not add any more shares here. Just completely leave it alone as much as is possible. Just leave it alone. Leave the number of shares alone and then watch what happens. It's going to be beautiful. All right, let's read some chat here. We're going up to 100K, then 107. And that, that's where ultimately I am skeptical about this rally, but our analysis here, that's very obviously like a check. That's basically like a check minus. It's not the most bullish thing in the world, but it's bullish. We're leaning in that direction. We took 4 lenses, 4 looks at the market. None of them said bearish. 3 of them said bullish. One of them was like, kind of. But all of them in general are pointing towards Bitcoin going through a rally. So all of this gives me a little bit more confidence that what I think Bitcoin is possibly going to be doing is coming back and back testing the 50 and trying to bounce. This is starting to look like the most probable setup to me. We'll see what happens. If we do drop back down to the 50 though, and you're trying to long this rally, it's not a bad idea at all. to consider a low leverage long position. Maybe like a 2-3x long position. Cover this stop loss very well. Drop it down here below this uptrending level of support. Below the 50. But if you target, let's say you target 99. If you get a low enough entry, like down here, like below 90, let's say we drop it down below 90, you get a low enough entry, you get 3.5. You can do that. You know what I mean? Target 100, you can get a 3.4, 3.7, maybe 4.0. So there's possibly a trade here. Just remember to maintain your risk to reward ratio, especially when you're not exactly following a particular strategy, which can be dangerous. Make sure that you are being conservative. It is better to have a lot of small profits than a couple of big wins and then a big loss that wipes it all out. Consistency is key when you're trading. Absolutely key when you're trading. So is there a trade setup here? Yes. If Bitcoin drops back down and tests the 50, I would be willing to consider an entry right here because of the underside, overside test. And so if that happens, that's where we could start to see a bounce and a recovery back up to 100. Now, let's also talk about one more theory real quick, which someone mentioned in chat earlier, and that is the idea that this is not 1, 2, 3, 4, 5, but that this is 1, 2, 3, 4, 5. This is possible. This is very possible. If we reject somewhere in here, all you'd have to do is not go above 103. And if you reject anywhere below 103, and this is why a rally up to 100 doesn't necessarily excite me, right? Because if you do rally up to 103 and you reject, this ends up becoming Elliott wave. And you could see this pointing down towards 70, down towards 60. If you see the bear market pick up, this is why. So in the short term, when we're looking at this potential wave 4 setup, yes, a rally up to 100 is very possible. On the other hand, we are still in a confirmed bear market. Until proven otherwise, we have not proven otherwise, by the way. And if we do anything other than break above 103, this is a confirmed 1, 2, 3, 4, 5 Elliott wave movement to the downside. And the only reason it's 103 is because of that wick. It is very possible to argue that that wick is invalid and that the level's actually 106. Okay, so if Bitcoin, for example, rallies up here, tests 100, 106, this moving average, the 200 daily moving average, you want to talk about moving averages, the 50's up here. It's a lot of resistance. It's a strong ceiling above us, folks. If we do manage to rally up here, it's still looking like a bear market bounce. And then, I mean, we can speculate all day about where this 5 wave would go. I don't think it would go crazy low, but it could easily drop down to 75 and be Elliott wave. It could drop down to 60. And it would definitely be Elliott wave. There's no way that this is the likelihood of this not being Elliott wave. The only way that it wouldn't be is either one, if we broke above 106. If we break above 106, I would say that we're going back to all-time high. If we break above 106 to 108, we're going back to ATH. That's what I would say. Bear market is invalidated if we break above like 106 to 110, somewhere in that zone. And we'll probably talk about this in today's video, so stay tuned for that. Like this box right here. If Bitcoin passes through this box, this is the gateway to 100K. No, actually, we'd be above 100K. This is the gate. I'm so used to 100K being the pie in the sky level, right? This is the gateway to all-time high. But if not, then you're looking at an Elliott wave, 1, 2, 3, 4, 5 bear market. That small one wave, which does happen, right? And it would be by the way, it'd be a very strong setup too. Because this is not even like the bounce here is to the 0.618. And if you don't consider the wick, you consider the bodies, it's only to the 0.5. So it's a very strong indicator that this is Elliott wave, right? So if the only other way that you would invalidate this is if the 5 wave was taller than $35,000, which, I mean, we could drop down to, well, even then, actually, I take that back. You can't invalidate it like that because the 3 wave in this instance is already longer than the 1 wave. So rule number 3 is already validated. So yeah, I take that back. The only way to invalidate this as being Elliott wave is for the 4 wave to not be the 4 wave, but for it actually to be a rally. And that would mean we have to break through here. So that's our overall thesis. On the short term, a lot of things pointing bullish. A lot of things that are exciting. There's a possible long trade here. That's the medium term. On the longer term, this Elliott wave structure, deeply concerning. Deeply concerning. If you're enjoying today's video, make sure to hit that like button and subscribe to the channel. We've got a very, very, very cool course coming out by the end of this week, actually, and that is going to be on Femex. If you guys have not already signed up for Femex, you absolutely should, and the reason that you should is because you're going to be getting access to our free trading course. Hundreds of dollars of value. I'm going to give it to you for free. All you have to do is sign up for Femex with the link in the description box down below and trade $100. Deposit and trade $100. You'll get access to this trading course for free. All you got to do is sign up, deposit $100, trade $100, and after that course launches this week, I'm going to give you instructions on how to actually get into that course for free because you signed up for Femex and you started trading. And you shouldn't just sign up for Femex, though, because of the course. You shouldn't just, like, do it and be like, okay, Jeb, I deposited my $100, I traded my $100, now I want my course. No, like, you should actually use Femex. It is a phenomenal cryptocurrency exchange. It's absolutely incredible, and we've been doing a lot of analysis over here in the course, which you're going to see. I mean, like, oh my goodness, look at all this mess, right? We've been doing a lot of analysis over here in the course. This is all stuff from the actual course, right? We've been doing things on the daily chart, down on the hourly chart. We got a bunch of educational content going in here. We're looking at different structures, different setups. All of this information, I'm not going to kind of show you what all of it is because you need to get into the course to see it, but there's a lot of analysis that's been going on over here in Femex, because we are learning together about how to trade. And so if you want to learn how to trade, the best place to do that is in our new course that we're launching in partnership with Femex. And you're going to get access to that course by signing up for Femex, depositing $100 and trading there. And then as we go on the channel here and I say, hey, look, here's a trade setup that you could possibly try. Here's something that seems to be high risk reward. All you got to do, open up Femex. There you go. That's where you end up doing that trade. It's a very important tool. If you're going to be trading in the Bitcoin and cryptocurrency markets, you need a good trading platform. Femex is the place to do that. So if you have not already, sign up for Femex with the link in the description box down below. We're going to have to go ahead and wrap it out here, guys. I hope you did enjoy today's video. If you did, again, like I said, make sure to hit that like button, subscribe to the channel. We are back from all of our traveling. We did a bunch of traveling all over the place in the month of December and the first couple of days here of January, but we're back in office for the foreseeable future. Very excited about what is going to be taking place here on the channel. A lot of developments going on behind the scenes that I'm very excited for. And I just cannot wait to see you guys continuing to grow your investment portfolios, growing in the ways of financial sovereignty, growing your net worths, reaching towards that goal that we talk about so much of having control over your finances. I will tell you something. 2025 will go down in history as the hardest year of my life. I highly, highly doubt that I'll ever go through a harder year than I went through in 2025. As you guys know, we had some personal tragedies that took place. They were completely out of our control. And I am so glad that I put our family in a financially sovereign position before all that happened. Now, I want to say I made some mistakes. I made some big mistakes. I made some huge mistakes. But the fact that I had done the work before everything happened in March, when our son passed away from a heart condition that we did not know about, that was congenital. Before he passed away, I'm so glad that I put our finances in a place where I had hundreds of thousands of dollars sitting in cash in an emergency fund, let alone investments, where I had the ability to step back the way that I did in 2025. You guys know I stepped back quite a bit, and I needed to. You want to talk about nightmare, right? I'm glad that I did the work, and I want to encourage you, do the work. You don't know when tragedy is going to strike or if it's going to strike. What you need to do as a man, I'm speaking to the men here because you are called by God to be providers and protectors of your family. Like 95% of our audience are men. It's a very high testosterone kind of channel, right? You are called by God to be a protector and a provider. It is your job. It is my job. I'm looking at myself in my viewfinder over here, right? I can see myself. It's your job. It's your job. You are supposed to be protecting someone. You are supposed to be providing for someone. If you got a wife and kids, it's obvious. If you don't have a wife and kids, you're single, you're missing out. But there's someone out there that needs you to care for them. Jeff, it's all about me. I want to go. Shut up. Grow up. It's not all about you. I will tell you from firsthand experience, you must find a purpose. Every man needs a quest. He needs a calling. He needs a reason that he gets out of bed in the morning. He needs someone that's depending on him. Who's depending on you? Who are your dependents? Do you have aging parents? Do you have a sibling who's on drugs? Do you have kids? Are you married? Do you have a company? You have employees counting on you? Who is it that's counting on you? Are you in a position to ensure their protection, their provision, their joy, and their peace? If not, not only is it your duty to do that, but I'm here to tell you that it will be your great pleasure to do that. There is no higher form of love than to lay down your life for those that you love, is what Jesus Christ said. There is no higher form of love, and there is no greater source of joy in a man's life than to care for somebody. So moving into this new year, I want to encourage you. Figure out who it is that you're responsible for. Take responsibility from them. Say, I'm going to take care of you. So long as you're supposed to. I'm not saying you should walk down the street and start picking people. I'm saying there are people that God has placed in your life. Children, younger siblings, aging parents. Say, I am going to do what I have to do to provide for you, to take care of you. And I'm going to make sure that when I'm making all this money in Bitcoin and cryptocurrency, it's not just so I can buy a fancy freaking Lambo. You know how many times I could have bought a Lambo in the last 8 years? I don't care. Will I do that one day? Probably. I think I would have to have $100 million before I was comfortable buying a Lamborghini. No shade on anybody who does it. Go for it. But what I'm concerned about is providing stability, safety, peace, and sounds of joy for my family. And I will tell you something, I am the happiest when I am doing that because that is the calling that God has created for me. So as we move into 2026 and we're trying to build more wealth and we're trying to grow a portfolio, let us not forget the reason that we're building a portfolio in the first place. The reason that we're building a financial portfolio in the first place is to support that calling of taking care of somebody. Maybe it's people at your local church. Maybe you're a deacon. Maybe you're a parent. Maybe you're a big brother. Maybe you got a sibling that needs your help. Whatever it is, who is counting on you? Figure it out and get after it. I appreciate all of you guys being here. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, and before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.